All right, I have got to dive into this with you. It's on my mind, it's on my heart. It comes up in these conversations, and I want to get nitty gritty with you, not in a super pencily detailed way, but in a heart level way. Let's talk about what's coming up, what's next. If you've been following the world for the last year, you know that it's weird, it's crazy, and there's a lot of guesses in a lot of different directions of what is going to happen as a result of 2020 and the chaos, the pandemonium we are seeing in 2021. Yes, the coronavirus was a thing. It was gnarly. It's still around. We're seeing some fading. We're seeing some thriving of it. But I want to set coronavirus and COVID-19 aside and get down to the brass tacks. The issue that I get to discuss with folks every day is this. What's going to happen? What's going to happen? We've got real estate prices. That's my world. They're off their rocker. They're off the rails. And by that, I mean they don't follow any past trajectory, and there's no way to know what's coming. Why? Because it's a many-fold issue. It's in part because lumber prices are sky high, and because the people that were typically moving out of the existing homes at the top level into these new construction, magnanimous new construction builds didn't do that because the lumber prices went up and the builders were also scared, and because they didn't vacate this home, this person didn't move up and this person didn't move up and this person didn't. Yes, that happened. And there's a lot of people that didn't feel comfortable with showings in their home. There's a lot of people that didn't this and that, and everything that people are saying is true. And yes, that's why a linear market like Oklahoma City and nearly every market in the US saw a 10% growth in real estate values in 2020. And then about the first 4 months of 2021, we saw about another 10 to 12% growth. And then the next 2 months, we saw about another 7% growth. And there's chaos. There's pandemonium. There are buyers climbing over one another to buy homes that would barely have sold 2 years ago. So, is it a timing thing? Like, should you sell now? And there are so many haphazard, weak agents that are gladly peddling there's never been a better time to sell, and you should sell now. There's record profit. Yes, absolutely there is a ton of profit to be made. And if you happen to hold a home that you don't personally live in and don't need, then yeah, it's a great time to sell. If it's a rental property or a problem property that you've been thinking about offloading, this is a crazy great opportunity to sell that. But what concerns me is what is happening all around and behind the sky high real estate values, because how values are up and perpetually to the right in real estate, they are also up and perpetually to the right in the stock market. And they're also up and perpetually to the right with automobiles and just about everything you can look at, except for some niches of stocks, some niches of bonds, and things like that. So what happens when a market like Oklahoma City, Tulsa, Wichita, the entire state of Ohio, these places that coastal and high value real estate markets tend to deploy money in order to buy sensible rental properties? What happens when these markets value to such a degree that the rents don't track with it, and you now no longer have a 1% rural property? Is Oklahoma a safe place to deploy money into 0.5% rural properties? Well, maybe. That's a bigger question. But the thing that I want to really dig into and get nitty gritty on is what's next? What's coming down the pike? Is this the top? Is this the time where we should sell everything you have? Should you get out? Should you redeploy? Should you just hold on and it's going to keep going? Like, what's coming up? And I think the tendency that we have is to look at the past, and this has some profound wisdom in some areas of our life. I think if you look from a spiritual standpoint at the past of humankind, you can see a lot of warnings and prescriptions about the future. of humankind. And you see from people 3,000 years ago the exact same folly and tendencies and trends that we see of people now. And that's amazing. They didn't have technology. They didn't have this. Yet we still thrived in some basically similar ways and fell in some basically similar ways. And that's it's possible to take wisdom from that. It's even prudent to take wisdom from the past. And what we have seen up until about 5 years ago is that people would look at the average rate of return for the U.S. equities market over the history of the U.S. stock market. And you would say, okay, it's annualized about a 12% rate of return. And so the Dave Ramseyites and the general money managing community or the personal finance community was very happy to look at the 70 to 90 year trajectory or the track record of the US stock market and to say, well, at the worst decade it returned like 8% or something like that, and at the best decade it was like 24%, and then it averages out to 12%, 11.8. So that means that if you put your money in and you park it over the long haul, that's the unsexy, secret path to wealth. Not so secret, it's just unsexy and pedestrian, but it gets you there. And then in real estate, the real estate specific version of that is The Millionaire Real Estate Investor. Like what I loved about that book by Gary Keller and Jay Papasan was just the pedestrian simplicity of it. Is buy a house with 20% down, get it 20% under market, do the same thing over and over again. And wow, like it has a profound impact. And then you work on getting a little bit better as you go, and it's even more profound. And that's amazing. It doesn't have to be super fancy and super amazing in order to be really profound at scale. And so we look at the past, and you see the decades that have you see the decades that have led to where we are now. And it's easy to go, okay, well, this today, everything that we're experiencing isn't so bad, I guess. It's easy to go, Argentina, there are people there that are super happy, and they have like a basic failed economy, and like there's like hyperinflation there, and like, look at Germany. Like Germany hasn't really had economic growth for quite a while, and it works for them. Like it's not as bad as they thought it would be. And then Japan, Japan's had stagnation. They've had 0% growth and actually like negative interest rates and like some crazy economic things that we thought was going to be horrible, but it's not playing out like that. And so there's this tendency to look at the past of the U.S. economy and look at these snippets of examples of countries that have been in stagnation or stagflation and say, maybe this government experiment that we're running called printing trillions and papering the U.S. with trillions, maybe it's all going to pan out. And I think the thing that sits on me and is irreconcilable is this. We have to be intellectually honest with ourselves and others and say, we are running a giant experiment right now. A giant, not just US-wide, but now worldwide experiment. We didn't choose this experiment, but we evolved into this experiment, and we are running a giant experiment. And like all experiments, true experiments, we don't know the outcome. So since 1970s, when we left the gold standard, that was a major inflection point, and then you evolve our economy since then, where now we're the we are the world's reserve currency. We are the standard of economic solidarity in the world, such that other currencies would be backing their currency in our currency. And why? Well, because we're as good as gold. A dollar is as good as gold. Except in the 70s, that stopped being literally true. And then what we have done over the past several years, 7-8 years, of just some deep money printing, of distributing things to different levels of bankers, the government getting in with mortgages and driving prices down, keeping prices down. And even jumping back to 2008, the GFC, when the government bought GM, and a couple other car companies, and then Alan Mulally's Ford said, forget that, and they did it without government stimmy. Like that was the start of this thing that we're really just fully baking right now. And this thing is what happens when you, with no foundation in reality, print money and distribute money. What happens? Because if we're being honest, 2020 was not a financially productive year for us or pretty much anyone except Zoom, Netflix, and the PPE manufacturers, which is a fraction of the world's companies. Yet, home values rose. Yet, the stock market rose to record heights. Vehicles got more expensive and continued to sell. Why? Why? Sit with that. This is an experiment in which we have all things are potentialities, but two clear ones that I can see are that we are going to go full scale here, and the government is going to blow so much wind into our sails that we, true to the rats where they put the little sensors in their brain and let them stimulate themselves, we just gonna keep stimulating ourselves. Because if you just keep handing me money and I can spend it, and you are going to send more, and it's not conditioned on me doing a good job, then why wouldn't I spend that? And then that's awesome. Like, I get a new iPhone, I get a new whatever. Like, this is awesome. I didn't even have to work for it. And then next month, a couple $1,000 more. And so then the costs of things, because this free money comes in the system, goes up. So the solution is, how do we bring more money? And you go down this cycle. And what's the end? I have no idea. But the government will be more and more and more involved because they are sugar daddies. And just like every good sugar daddy, they can't stand to see their kiddos sadsies. Which is why the global financial crisis just pantsed them, man. Just shamed our government. And I think they looked around in their internal meetings and said, never again. We will never again let our kids cry because they're better than that. And they won't elect us again if we let them down. And so now, year after year, we have to have an up and to the right appearance. Even if it's a shell game. Even if those stock valuations have nothing to do with the underlying company. Even if there's nothing real about the up and to the right, we're addicted. We're just like those rats. They just keep hammering the sensor until they forget to eat, they forget to do anything else, and then they die. So that's one end. It's government teat. It's fundamentality of government printing, and then, hey, if they're the one providing all the jobs, we might as well standardize healthcare. It really does make sense if you think about it. And why don't we standardize everything else? And why not college for everyone? And the only way you can ever guarantee true equality is if the government provides it, and they do it in a very open way. So why not just the government does everything, and then we will just do what they say? And so, sound familiar? Or we're going to go to a real economic reset. Don't know what that means. Don't know what that it would look like exactly. But it's not this. It's this. It probably comes through a path that is very austere. The measures of coming back to economic solidarity would probably mean our phones aren't as nice, our cars aren't as nice, and our houses aren't as nice. Because it takes money to buy all these things and to do all these things. And money costs money. And so if we go from money being inflated and fake and passed out, and you can just go do whatever you want with it, to money being real and substantiated by some sort of value store that backs it, gold, whatever, just not printed in increasing quantities at the drop of a hat to the constituents' desire, then the path back to that financial trueness or economic trueness is a painful, bumpy path. And so there's the question of, will our government allow us to do that? Will we accept it as Americans? Will the world accept it? And even if we would accept it, even if we would look at it and say, we so value the economic integrity that comes through this, that we'll take the austerity and we'll just take 5 years of just crap and it'll be good for our kids. If that's our reality, will our government let us? Or will they know that if they're in power when the austerity begins, then there's no way they'll be elected? And will they just start pandering and saying, oh, sweet baby, here's $2,000. Oh, you've got 9 kids? Here's $12,000. Will the government even let us go down that pathway? But regardless of which pathway, those are 2 clear options here. And so I think what we need to do, bringing this home, is we need to stop looking at the past as though the past of 1940 has anything to do with today. Because it doesn't. It's a different world. It's a different economic system. We are not the same U.S. We are not united. We are not unified on anything other than the importance of self. And so we need to not pretend that the same thing that produced, the roaring 20s and all this, junk that came in the decades that followed has anything to do with us. We need to not look at the 60s and 70s and say, oh, well, that's that. If it worked then, it'll work now. We don't have the luxury of learning from the past as to discern what's coming next. And so I think the best thing for us to do is to make fundamentally sound decisions. Go back to the core, go back to our personal value systems, go back to our communal value systems, strengthen those, and make decisions that align with our values. And know that we don't know, and we may not have real control over whether the government induces inflation at the rate of 10 to 20% a year and eats our wealth or buoys that wealth if your wealth is in a inflation buoyed asset like real estate. We don't know that. Or if we're 10 years away from a major systemic reset that drives us to a true economy, that drives us to austerity, we don't know if 50 years from now the average home size in the US will be 1,100 square feet instead of 1,900. We don't know if closets will be smaller, because we didn't know at the time that we were going from an average home size of 900 square feet to 1,900. We didn't know that we were tripling the size of the average closet. We didn't know those things. We did them slowly over time. And now we're on the other side of this fake system that we've created. Well, we're in the middle. We don't know actually where we are. Kind of like anytime you're in a maze. But what we know is it's not built on fundamentals. It's a divergent point where something's going to happen and we need to keep our ears to the ground. We need to make fundamental decisions that connect with who we are as people and as communities and are fundamentally sound. And we need to be observant, be watchful, and stand firm in the faith if you're a person of faith. Otherwise, in your money, which the government is happily pissing all over. So don't do that. Stand firm in something a little firmer. All right, I'm out.